Angel alert! With recent market shifts and closures of some reverse mortgage companies, SunWest remains over 40 years strong and a longstanding leader in reverse mortgage lending. We're here for you and for your borrowers. At SunWest, we understand how important it is to meet your clients' expectations. So why not exceed them by closing their reverse loan fast? Go to hecom.swmc.com for all the information you'll need to use our simple tools, submit your reverse mortgage loans for immediate approval, and make your originations fast. If you'd like to learn more about reverse mortgage loans and why they're so popular in today's market, join us on Friday at 1 p.m. Pacific for a live anonymous webinar. Go to hecom.swmc.com for more information. See you Friday.
Welcome to The Interest. I'm Sarah Wolak. Unfortunately, we have more layoffs, and this time it's at one of the industry's top lenders. We'll have more on that coming up, but first, mortgage applications are growing, but are still down from where we were a year ago. So are non-QM loans, the thing that can help you bring your bottom line back up.
I think it's more than just kind of a product line that, people in the know about.
Non-qualified mortgages still only make up a small slice of originations, but they're gaining more attention. Some of that is because professionals in the mortgage industry are more aware of the products. But we also see more people opting for career paths that make it harder to qualify for a traditional loan.
We see a lot of different varieties of borrowers who, either have difficulties or just can't come up with the conditioning required for traditional financing.
Non-QM lenders are hopeful that this means growth in non-QM volume, whether it's bank statement loans for self-employed people or investors taking advantage of equity with debt service coverage loans.
Absolutely. We're expecting to grow. Honestly, non-QM in general is about 4% of the market, so the sky has always been the limit.
Ben Scribner of Angel Oak Solutions told attendees at the New England Mortgage Expo that you don't have to become an expert right away. It might feel overwhelming to learn about new products, but non-QM lenders have staff to help you help your clients.
Every loan officer maximizing every single borrower that comes in through their door is never more paramount than now.
While non-QM loans are gaining attention, many lenders have struggled to win over investors. Some non-QM lenders have left the space or shut down. Angel Oak took a loss on loans that they sold in November, but Scribner is confident stability in rates will help turn that around.
That does, from a secondary perspective, does definitely instill some confidence that everything's kind of settling in.
Michael Pearson of A&D Mortgage is also hopeful investors are changing their views.
Yeah, I guess we'll find out the next time we do a purchase, but yeah, it seems to me that it's stabilized.
If you're currently not offering non-QM products, lenders say you can start by identifying the ones that meet the biggest needs of your borrowers.
But, we always tell people, start with what are you not able to do?
In helping borrowers who thought they'd never get a loan approval are more likely to want to tell their friends and family about you.
But most of those bank statement borrowers have been told no multiple times for probably years.
You can learn more about working with non-QM lenders on The Principal, the Mortgage News Network's daily podcast, available wherever you get your podcasts. For the Mortgage News Network, I'm Mike Savino.
Thanks, Mike. And we keep seeing positive signs for all origination turning around after hitting a low point in November. Redfin says that home buyers are easing back into the market and that things could be looking up. Home buying activity is still low compared to last year, but even bidding wars are making a comeback in markets like Seattle and Central Florida. Buyers are taking advantage of the market finally being in their favor, but sellers are taking a wait-and-see approach as home prices cool, with new listings falling 18% compared to last year. Still, Redfin economists seem optimistic about the direction the market is headed in. A 28% increase in mortgage apps from November and lowering rates are signs of market recovery. Coming up, Rocket cuts its staff.
Morgan of SunWest Mortgage is here to change the world of loan originations forever. From sending updates to your clients to allowing you more time, you can do it all in a simple chat. You no longer have to struggle with documents. All you need to do is select the files and upload them, and they're submitted in an instant along with your loan file. With SunWest, your true home is always within.
Welcome back. Rocket Mortgage continues to cut costs, this time laying off 50 employees. The news follows layoffs at Rocket Central earlier this month. According to the company, those employees make up less than 1/4% of the company's staff. A spokesperson also says Rocket regularly looks at what roles are needed at the company. Posts made on social media by the employees seem to suggest that the affected positions were software engineers. The Rocket spokesperson did not answer questions about whether the affected employees would receive severance packages. We'll be right back with what else is interesting today.
I had to watch him go from so capable to a different person altogether, and it was really hard. We're hoping that this message gets to veterans out there who are in similar struggles. That's how fast SunWest worked. It was truly amazing. It makes me very happy to know that there's a company out there that cares so much, that they go through so much to help, because we never expected this. Never.
SunWest understands that your success is built one family at a time. Visit sunwestpartners.com.
Welcome back. Here's what else is interesting today. It looks like home buyers saw a larger than normal return on their investments when 2022 came to a close. According to Adam, sellers nationwide saw an average profit of $112,000 on a typical home. That's up 21% from last year and 78% from 2020. Adam says that amounts to a 52% return on investment. Both raw profits and ROI have improved for 11 straight years for the median home nationwide. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.